We're going to talk about Manhattan and Brooklyn and how it fared in the Q1 data report. We're going to also take a look at new developments and also what inventory is looking like for new developments. And we're also going to touch on what's happening with interest rates. So let's dive in.
Let's talk about closed sales in the first quarter in Manhattan. There were over 2,300 closed sales, down about 11% from the fourth quarter. The start of this year was really robust, but we're seeing pricing from many properties comparable to 2015 and 2016.
Now, we had 2,700 contracts signed in the first quarter, which is up about 18% from the previous quarter. It sounds great, and we had a pretty busy January and start to February, but it's since cooled off after that. Because of not so optimistic economic outlook and anticipated Fed cuts that were going to happen that got pushed, people pulled back a little bit the last half of our data quarter.
Average is 123 days on the market, a decrease about 10% compared to the first quarter in 2023. Properties from 500,000 to 1 million were the fastest to sell, and that is about 110 days average.
Now, inventory for the first quarter hovered right around 6,200 units, up just a bit from the previous quarter. A lot of stuff that came on the market during 1Q was priced between $1 million and $1.5 million. These were sellers that were largely testing the market to see if buyers were actually going to come out with anticipated interest rates coming down.
New development inventory over the last 5 years has dropped 50% compared to the 5 years before that. Closings of new development are down 22% from the fourth quarter, and the pipeline of new developments is light for the coming years.
Now let's switch gears and head over to Brooklyn, where we had about 1,300 closed sales, up 6% from the previous quarter. Now, average pricing and the number of sales is all increasing as we look at the data from the previous quarter. That to us tells us there's a lot of activity and prices are still increasing, meaning there's a lot of demand.
Over 900 contracts were signed in the first quarter. That's 5% more compared to the fourth quarter.
Now, the average time on the market was about 90 days, a small increase from the previous quarter. And as expected, studios spent the least time on the market out of all the bedroom types.
Over 1,400 units were listed. That's up 12%. The listed inventory from 1 to 2 million rose 12% year over year.
So let's sum everything up, and we'll start off with new development. Inventory across the city with new development is super low right now. Now, it's not moving nearly as fast as developers would like, so to us, that means there are deals to be had.
Overall, we're seeing that we've been in a flat market over the past few months. Although rates are wobbling a bit in the last few weeks, at least 3 rate cuts are expected by the Fed in 2024. We're still targeting this summer as a time they will move into more favorable territory.
So we talked about a lot of stuff regarding our first quarter report and some of the other variables going on that we're dealing with right now. Let's talk about how your decision to sell or buy in Q2, 3, or 4 is affected by all of this. We're available anytime.